Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Buy-to-let investments, a smart guide to profitable rental properties. Buy-to-let properties have become a go-to investment for those looking to build long-term wealth. With the right strategy, they offer steady rental income and the potential for property value growth over time. This guide breaks down how to make buy-to-let work for you, from choosing the right location to managing tenants effectively. Whether you're a first-time landlord or expanding your portfolio, understanding the ins and outs of rental property investment is key. We'll cover the essentials: financing, legal considerations, and tips for maximizing returns so you can make informed decisions. Let's dive in. Understanding buy-to-let properties. Buy-to-let properties are a popular way to generate passive income through real estate. Unlike flipping houses, this strategy focuses on long-term gains, rental cash flow, and property appreciation. But before jumping in, it's essential to grasp the basics, from property types to legal obligations. Definition and key characteristics of buy-to-let investments. A buy-to-let property is purchased specifically to rent out, not to live in. The goal? Steady rental income and potential value growth over time. Investors often include first-time landlords looking for an alternative to stocks or savings, portfolio builders diversifying assets with tangible property, retirees seeking reliable income post-career. Unlike traditional home buyers, buy-to-let investors prioritize rental demand, tenant appeal, and location yield over personal taste. Types of buy-to-let properties. Not all rental properties are the same. The right choice depends on your budget, risk tolerance, and goals. Residential buy-to-let. Single-family homes or apartments. Ideal for stable, long-term tenants. Commercial buy-to-let. Offices, retail spaces, or warehouses. Higher yields but longer leases and stricter tenant laws. HMOs, houses in multiple occupation. Rented room by room. Higher income potential but more management work. HMOs, for example, often outperform standard rentals in student-heavy areas, but they require licensing and additional safety checks. Legal and financial requirements. Buy-to-let isn't as simple as buying a home and handing over keys. Key considerations include mortgages. Buy-to-let loans require larger deposits and higher interest rates than residential mortgages. Lenders assess projected rental income, not just your salary. Landlord responsibilities. From safety certificates to deposit protection schemes, compliance is non-negotiable. Taxes. Income tax on rent, capital gains tax when selling, and potential stamp duty surcharges. Skipping homework here can turn a profitable investment into a legal headache. Always consult a financial advisor or property solicitor before signing contracts. Benefits of investing in buy-to-let properties. Buy-to-let investments aren't just about owning property. They're about unlocking multiple revenue streams. From monthly rent checks to long-term value growth, this strategy offers financial perks that other assets can't match. Let's break down why so many investors swear by rental properties. Steady rental income. Rental income acts like a predictable paycheck, one that isn't tied to office hours or stock market swings. Here's how it works. Rental yields measure annual rent as a percentage of the property's value. High-demand areas often deliver stronger yields. Tenant stability with long leases reduces income gaps. Unlike dividends that fluctuate, rent rolls in monthly, covering mortgages and building cash reserves. Over time, rent increases with inflation, giving your income an upward bump without extra effort. Property appreciation over time. Homes aren't just rent machines, they're appreciating assets. Historical data shows UK property prices rising over decades despite short-term dips. Capital growth means your house today could be worth much more in a decade. Supply and demand in popular areas push prices up. Forced appreciation through renovations can speed up gains. Even if the market slows, you still earn rent. Compare that to stocks. A crash leaves you with nothing until prices rebound. Tax advantages and financial incentives. The government offers perks to landlords, if you know where to look. Mortgage interest tax relief allows deducting a portion of loan interest from rental income. The Rent a Room scheme lets you earn tax-free income by renting a spare room. Allowable expenses include repairs, agent fees, and even travel costs for property visits. Smart investors use these breaks to keep more of their rent money. A repair bill could lower your taxable income by the same amount. Buy-to-let isn't a get-rich-quick scheme, but for those who play it right, the rewards stack up year after year. Next, let's talk about picking the right property to maximize those benefits. That's all for part 1. Stay tuned for part 2, where we'll dive into the nitty-gritty of choosing the right property and maximizing your rental income. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.